Hey, we're back again here today. I want to just take a step back and look at these markets. And what we really want to focus on here today is where we've been trading at since Russia invaded Ukraine on February 24th. So when we bring this first chart to you, this is a July crude oil chart. And as you can see, we got a red horizontal line on there. And that line goes from the date of the invasion on February 24th until today. And what we had is the closing prices for each of these lines on these next charts. And as you can see, on July crude oil, it closed just below $87 on February 24th. And when we corrected back in mid-March, we went near that level. Okay, and you'd have to say that was an area of support and then bounced back. Now we're rolling lower again in here this week a little bit. That's probably the target area and where we could go back towards. But that's the crude oil one, and we really wanted to bring that into focus right now because that is a market along with wheat that had the biggest response from the invasion. As we quick flip over to the corn market, as you can see, the July corn contract, traded at 678 or closed at 678 on that day. And when you take a step back here over the last month, we really have been sideways. Yes, we've had some spikes up in the market, getting near 750 a bushel, but basically corn's traded $7 to $7.40 over the last month. If we get below $7 in here, that 678 would be our target. As we get towards the bean side of it, so you can see not much of a focus on beans when it comes to war. Again, like corn, a little bit of a sideways trade in here right now. We're not reading much into today's break in here. I mean, you could put some support in the $15.75 to $16 area. But again, beans are not influenced like what we've seen over on the crude oil market, a little bit on corn. And then now when I look at the next chart, the big movement was really over on the wheat market, as wheat futures traded at $9.25 on the day of the invasion and peaked out just above $12.50 on the July Chicago wheat contract. If we settle below $10 in here today, we're a bit fearful on Chicago wheat that we could pull back to this $9.25 area of support. We want to go look at a few spread charts in here right now. And we've talked about spreads on our daily advisory report. And the first one we're bringing to you is a July-December corn spread. Again, that horizontal line is the invasion date, okay? But what I think we need to point out to here on corn is that the spread, the old crop, new crop spread has turned lower. I think it's turned lower on a few factors in here. One is that more of the focus is becoming on new crop compared to old crop. And the other reason why this spread is narrowing up is that we've got a decent production down in South America and probably don't have that demand push in here on old crop. The other thing what comes up is if you're a world importer, why pay 60 cents more a bushel for old crop than what you can wait for and buy new? We think this spread has probably turned down. Look for this July D's corn spread to continue to narrow up. Here's a bean spread. Again, we're looking at old crop, new crop. That spread is held together quite a bit better compared to the corn market in here. And some of the argument is we're still getting some export business on old crop beans, and the South American bean crop did get smaller. Our thinking, though, with this spread is it's going to narrow up as well, too, because we believe the focus is going to be shifting towards new crop with the uncertainty of weather and away from old crop. We know bean ending carryout levels have tightened up. We just don't see them at a level right now where they're going to be extreme tightness that this old crop needs to be rationed out. Plus, if you're an end user and you can get by towards new crop, why pay $1.80 more for old crop when new crop will be coming around the corner? We see this spread narrowing up. Here's a July wheat spread. This is the same crop year on July to December. What we just want to highlight here is a volatility with the market taking off. I mean, you can see from when the war broke out, you had this spread gain nearly $2 a bushel. Now that is quickly all retraced back. These spreads need to be watched in here. Just gave you a look on corn, beans, and wheat. As we wrap up today in here right now, we just think that this war premium is being taken out of the market. We're not saying that the war is over with, but it doesn't seem like it's a focus of the market anymore. It'll be interesting come Thursday on how much movement we see from the USDA stocks and acreage report. And as we flip the calendar next week, we're into April and we're going to be trading spring weather here in the US. It'll be, like I said, it'll be interesting if we start focusing on that more than on the war side of it. Follow the spreads in here. The spreads have us a bit cautious. We're going to be back here again on Thursday to highlight the stocks and acreage report. If you could, go to a YouTube page and like us and subscribe, that would be great. Any questions, feel free to give us a call or drop us an email, especially if you have suggestions for upcoming webinars. Have a great day.